Breakout Investing with your host, Ken Shreve.
Well, good afternoon, everyone. Welcome to another edition of Breakout Investing with Ken Shreve. Just a reminder, my show airs every Tuesday and Thursday from 3 to 4 p.m. Eastern on the TFNN radio network. You can also find me on Channel 1 on Tiger TV on the homepage of TFNN.com. You can pick the show up on iTunes or listen live on your smartphone at TFNN.mobi. Number to use to talk to me is 877-927-6648, 877-927-6648. Give me a call. Let me know what's going on, what you're thinking about this market. Are you bullish for the rest of the year? Are you bearish for the rest of the year? Questions about individual stocks, just give me a call, folks. Sent out another weekly update today of my Ultimate Growth Stocks newsletter that launched just over a month ago at TFNN.com. My newsletter publishes every Tuesday, and I send out email alerts in between with buy alerts, sell alerts sometimes, and market updates in between. So that's Ultimate Growth Stocks. You can go right on the homepage of TFNN.com in the newsletters tab, click on investment newsletters, and you'll see Ultimate Growth Stocks. Learn about my methodology, how I approach the market. It obviously, as the name would indicate, it's a growth stock newsletter. It's a challenging environment right now for growth and aggressive growth names, but that's what happens in a market that is under a bit of distribution like this one is. Despite recent weakness in the market and technical weakness in the Dow, S&P 500, and NASDAQ, we do have a decent day taking shape here with a little less than 1 hour to go in Tuesday's session. A quick check on the markets here. The Dow is up 57 points. That's 0.5% to 12,147. The NASDAQ up nearly 13 points. That's also 0.5% to 2715, and the S&P 500 up 0.5%. That's good for almost 7 points to 1292.84, almost 1293. So, again, this is 1 day of gains. The major stock averages are in a bit of technical hurt here. They recently fell again below their 50-day moving averages. I have a chart up of the Dow right now, and you can see headed into today, the Dow was working on a 4-session losing streak. So its 50-day moving average is all the way up at 12,459. The Dow right now, again, trading at 12,147. So it's about 300 points or so below the 50-day moving average. So the market has some repair work to do. I mean, it's in a classic consolidation right now. They're only about 6% off their recent highs. That applies to the Dow, S&P 500, and NASDAQ. Only about 6% off their recent highs. To me, it seems like now that they're below the 50-day moving averages, the 200-day line would seem to be in play. For the Dow, that's around 11,658. We'll do a quick check of the NASDAQ here and see where its 200-day moving average. That's going to be about 2620 for the NASDAQ. NASDAQ right now currently trading at 2713, and for the S&P 500, its 200-day moving average looks to be, let's see, in about the 1250 area. So my general take on the market is that over the next several weeks, I am expecting more downside. I think we're just in a seasonally very difficult time for the market here. Of course, Fed Chairman Ben Bernanke is going to be speaking in just over half an hour. He'll be speaking at 3:45 p.m. Eastern, discussing the U.S. economic outlook at the International Monetary Conference in Atlanta. Rest assured, I don't think you're going to hear anything surprising come out of Ben Bernanke's mouth. I don't think he's going to want to say anything that's going to unsettle the markets further. I think he's probably going to acknowledge that the economy could be in a soft patch here, and I just don't think he's going to say anything that is going to spook the markets. 2 months ago, if you had asked me what were the chances of interest rates headed higher before the end of the year, the Fed funds rate maybe moving up from 1/4% to 0.5% to 0.75% 2 months ago, I thought that there was a chance that the economy was really going to start kicking into a gear and the Fed may be forced to combat inflation and raise interest rates by the end of the year. Now, I don't think it's likely in light of the economic data that we've seen over the past several weeks. That, of course, talking about the very weak jobs report that we recently saw and weak manufacturing data. Prices are still high at the pumps. I think retail sales that are on tap for next week, hopefully they'll be good. They may not be. So I think the headwinds are still out there for the market. And when it comes to the Dow, S&P 500, and NASDAQ, I think the 200-day lines are probably in play. I don't, as I've said, don't expect a bear market to take shape here. We are the third year into a bull market, which is typically a choppy one. I'm not expecting a severe pullback of 15 to 20% off the highs, but the 200-day lines for the major averages are right now about 10% off of the recent highs. So that would be another 4 or 5% lower we could go, but we'll see. And in the end, ultimately the price and volume trends in the major averages are my guide. If we end up higher today, which looks like is going to be the case, this is going to be day one of a rally attempt. And of course, I'm going to continue to look for a follow-through day that would signal a new uptrend. We got a false signal. Recently, we saw a follow-through day in the NASDAQ. I think it was maybe 5 or 6 days ago. That didn't amount to anything. So we want to be open to the possibility that a new uptrend could begin sooner than I expect. But again, I think if I were pushed into a corner, I would say that there's probably a little more downside ahead. Okay, volume on the New York Stock Exchange and NASDAQ right now tracking pretty close to Monday's levels. Still not a lot of volume in the market. Average volume on the NASDAQ these days is just under 2 billion shares. For the New York Stock Exchange, it's just under 1 billion. So it looks like we're tracking pretty close to the levels that we saw on Monday. NASDAQ volume could come in a little bit higher. So hopefully, we'll check on the market from time to time during the show, and hopefully we'll set up for a good, strong close. But in the end, it's only going to be the first day of a rally attempt for the market. There's still a lot of technical damage out there across all sectors, small cap, mid cap, large cap, and technical damage in the major averages as well. So I think that's probably going to take some time to play out. Taking a look at gold for August delivery. Fell $3.20 today. That's only 0.2% to $15.44 an ounce. That's on the COMEX division of the New York Merc. Silver for July delivery gained 26 cents or 0.7% to $37.05 an ounce. And oil closed slightly higher to settle at $99.09 a barrel. Take a quick look at the GLD, the popular ETF, which tracks the price of oil. See the GLD recently trading around $150.52 a share. Mostly unchanged on the day. Technically still looks strong, holding well above its 50-day moving average. Don't see anything wrong with the GLD. Technically, gold continues to find a bid out there. We can also take a look at the SLV, which tracks the price of silver, and the iShares Silver Trust currently up 1.3% to 36.19, still below its 50-day moving average, which I've said in the past could turn out to be a resistance lever for the SLV, just like the 50-day moving averages for the Dow, S&P 500, and NASDAQ. Now that all those indexes are below that support level, it could turn into resistance. So we'll watch that. Mentioned oil closing slightly higher to $99.09 a barrel. Big meeting tomorrow scheduled. OPEC is expected to discuss a change in their production quota. I think this is fairly significant news. The cartel is meeting on Wednesday in Vienna, Austria. Consensus seems to be that the OPEC ministers are likely going to increase output in an attempt to push fuel prices lower. That would hopefully lessen lower oil prices at the pump, and I think that's a very real issue for the economy going forward. Again, we have retail sales coming out next week. And if the market perceives that consumer spending is starting to slow as a result of continued strength in oil prices, that may also be a tough thing for the market to handle. So we'll see what OPEC has to say when they meet tomorrow. Other news today, my friends over at Investors Business Daily came out with their latest reading on consumer confidence for the month of June. This is the first reading of consumer confidence every month that IBD comes out with. The IBD TIP Economic Optimism Index rose just slightly, nearly 2 points, 1.8 points, or 4.2% in June, to a reading of 44.6. That compares to the May reading of 42.8. Keep in mind that readings above 50 indicate optimism, below 50 indicate pessimism, so that index is still in decidedly pessimistic territory. 831 adults were polled in this survey. The margin of error is plus or minus 3.5 percentage points. Inside this index, there are three components. The 6-month economic outlook component. This is a measure of how consumers feel about the economy's prospects over the next 6 months. That increased 2 points, 4.7% to 44.3. That reading is still below 50. It's still pessimistic. The personal financial outlook, and this is a measure of how Americans feel about their own finances in the next 6 months. That rose just under 1 point, or 1.8%, to reach 50.9. So that is in slightly optimistic territory. And finally, confidence in federal economic policies. This is a measure of how government economic policies are working. That rose 2.4 points to reach 38.5, but that is in very much pessimistic territory. Did you get a chance to see Dallas Federal Reserve President Richard Fisher on CNBC earlier today? He said there's plenty of liquidity in the U.S. financial system, and there's no need for the central bank to continue with more rounds of quantitative easing. That's not the first time I've heard that from a Fed governor in recent weeks. Again, it's going to be interesting to hear what Ben Bernanke says at 3:45 Eastern today. That's coming up in just a half an hour. He's going to be addressing the International Monetary Conference in Atlanta, talking about the economy. And again, I don't think that the Fed is in a rush to raise interest rates here. They realize the economy is on shaky ground, and I don't think that QE3 is immediately going to start up when QE2 ends in June, but the Fed will certainly use it if it needs to. Okay, quick check on some earnings reports today as we head into a break. Pep Boys, not a good day for Pep Boys. That's ticker PBY. Shares were recently down 15% to $11.44. We'll pull up a chart here of Pep Boy real quick and take a look. It's not having a good day. Down almost 17% to $11.24. The earnings were definitely disappointing. 23 cents a share, flat from a year ago. Investors did not like the results. We'll be right back, folks.
Tiger University's Tiger Trading Tracks is your blueprint to building a solid foundation of comprehensive trading tools. An in-depth educational program, Tiger Trading Tracks features a step-by-step process for understanding the markets and creating success strategies for your trading. The Tiger Trading Track journey will prepare you to adapt and develop a personal trading and investing strategy that will perform best for you. While you can't control the markets you trade, a Tiger Trading Tracks education will allow you to understand your personal trading and investing needs and what markets are best suited for you. Now is the time for you to travel your path to financial independence. Follow your Tiger Trading Track to trading and investment success. Go to tigeruniversity.com and click on Tiger Trading Track in the navigation bar. Choose the course that most interests you and begin your education today.
Direction shares leverage ETFs fuse the benefits of exchange-traded funds with the innovation you expect from Direction, providing investors with opportunities to magnify their short-term perspective, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. Direction shares, ETFs to the power of X. To learn more about Direction shares, click on the Direction banner on the front page of tfnn.com or call 866-476-7523. There is no guarantee that the funds will achieve their objective. The ETFs are not suitable for all investors. investors and should be utilized only by sophisticated investors who understand short-term trading, leverage risk, consequences of seeking daily leverage investment results, and intend to actively monitor and manage their investments. An investor should consider the investment objective, risk, charges, and expenses of Direction shares carefully before investing. The prospectus contains this and other information and can be obtained at directionshares.com. Please read the prospectus carefully before investing. Distributed by Foresight Fund Services, LLC.
Great Basin Gold is an international gold mining company with 2 producing mines in the world's most prolific gold mining areas, the Hollister Gold Mine on the Carlin Trend in Nevada and the Burnstone Gold Mine in the Wits Basin in South Africa. The Burnstone Mine is a low-cost, long-life, shallow mine that is a company builder, and the Hollister Mine is one of the world's highest-grade ore bodies being mined today. Burnstone offers a huge re-rating potential by producing in the 4th quarter, and Hollister represents a tremendous and very exciting exploration opportunity. With annual production of 165,000 ounces of gold in 2010, 260,000 in 2011, and 330,000 ounces of gold in 2012, Great Basin is poised to become a leading mid-tier gold producer. Great Basin Gold has resources of over 13 million ounces, exceptional organic growth potential at its current mines, and greenfield operations in Tanzania and Mozambique. Great Basin has strong management and a commitment to deliver exceptional value and cash flow to its shareholders while acting responsibly toward its surrounding communities. To find out more about Great Basin Gold, click on their banner on the front page of TFNN.com or check them out on the American Stock Exchange, symbol GBG.
Would you like to discover the next great tech stock? David White, TFNN's technology guru, has just launched his new newsletter, The Technology Insider. In his newsletter, David will be looking for those shining stars that may turn into the next Apple, Microsoft, or Cisco. David combines his technology background as a software programmer with his market skills as a successful professional trader to give you this unique newsletter. We're on the verge of the next great tech run. With the Technology Insider, you'll be in front of the run-up and not lagging behind. David is developing a long-term investment portfolio, therefore we're only offering the Technology Insider as an annual subscription with a remarkable price of only $395. That's right, for a little over $1 a day, you'll receive the fundamental technology wisdom and technical trading skills of the Technology Insider David White. What are you waiting for? Go to the front of TFNN.com, click on the link on the front page, sign up for your 2-week free trial, and become a Technology Insider today.
Hi folks, this is Tom O'Brien. My new book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, is for sale at Amazon.com for only $18.40.
Okay, welcome back, folks, to Breakout Investing with Ken Shreve. Also on the earnings front Tuesday, we saw earnings from G3 Apparel Group. Some of these apparel makers have been having a tough time recently with rising costs, and Polo Ralph Lauren talked about it just recently. Well, G3 Apparel Group shares were recently down about 14%, it looks like, to $32.94 after the clothing company late Monday reported an unexpected loss and forecast second quarter earnings below Wall Street estimates. I quickly mentioned Pep Boys before we went to break. That stock is definitely having a rough day. I want to just go ahead and take another look at Pep Boys here and see what that stock is doing today. Shares of Pep Boys down almost 17% to $11.24. What you have here is a big miss on the bottom line and top line. Their first quarter profit came in at 23 cents a share. That was flat from a year ago. Analysts were looking for 30 cents. Revenue rose less than 1% from a year ago. Again, mostly flat to $513.5 million. Analysts were looking for a much higher number in revenue of $537 million. So we're pretty much at the tail end of earnings season here, but a few reports trickling in here and there. It brings up an interesting point about what the next catalysts for the market are going to be. We really don't have any more earnings reports. You have this situation in Europe with the Eurozone and some of these debt problems faced by Ireland, Spain, Greece. I just don't see that, a resolution in Greece, for example, being a catalyst for the U.S. market. I think the U.S. market realizes that that people are going to come to Greece's aid, and they're going to be given more time to sort their problems out. Is economic data on the home front going to be a catalyst for the market? Well, if you believe that retail sales next week are going to come in much better than expected, or PPI data next week is not going to reveal signs of reflation, I suppose economic data could be a catalyst. But overall, I'm just not sure what the near-term catalysts are for the U.S. stock market, which is why I'm still cautious here and think that we could, see a little bit more downside. Other news today, we had International Paper, a little merger and acquisition activity. International Paper, they're the world's largest pulp and paper maker. They made a $3.3 billion hostile takeover bid for Temple Inland. This is a move, if the deal goes through, will increase International Paper's presence in the North American market for containerboard, which is used in shipping boxes. Shares of International Paper were recently trading around $30.03, up 1.3% on the day. Shares of Temple Inland were up a whopping 42% to $29.90, but the company does not want any part of this deal that's being offered by International Paper. The deal currently values Temple Inland at $30.60 a share. Earlier today, Temple Inland's board adopted a shareholder rights plan, which is basically a poison pill. Poison pill is going to give shareholders the right to buy new shares of Temple Inland stock, which will dilute the value of existing stock in the marketplace. So Temple Inland wants no part of it, but the stock is having a big day, up close to the value of the stock deal. Again, the deal values Temple Inland at $30.60. Shares of Temple Inland trading around $29.90 thereabouts. Interesting report out today from Deutsche Bank. There was a lot of analysts there are looking for a big surge in leverage buyout activity in coming months, this year and next. They point to $500 billion in uninvested private equity as a key driver of buyouts, and they mentioned a few companies that could be in play here. Capstone Paper and Packaging, that's ticker KS, Century Aluminum, ticker CENX, KLA Tencor, KLAC, Uplink Communications, OPLK, and finally American Greetings, AM. I've said in recent weeks and recent months, and some of the stuff that I've written over at realmoney.com and the Street, that I think that this year is you're going to continue to see your fair amount of M&A activity. I think you'll continue to see deals in the oil and gas sector, the energy space, possibly retail, semiconductors. I think that there's just a lot of fragmented industries out there that are going to continue to see pretty good deal flow. But again, a lot of that is predicated on how the economy does between now and the end of the year. Don't forget, folks, check out a free trial to my Ultimate Growth Stocks newsletter, launched just over a month ago at tfnn.com. You can click the newsletters tab right on the homepage and click on investment newsletters. And when we come back, we're going to talk about growth stocks, so we'll be right back.
Timing the Trade Charts is a complete charting software package that brings together all the tools that you need to analyze stocks using Tom O'Brien's Timing the Trade methodology in one easy-to-use application. For the low yearly rate of $449, Timing the Trade Charts automatically computes swing points, ABCs, Fibonacci retracement levels, confluence, gaps, and much more. Timing the Trade Charts is now available at tfnn.com, and you can download it and try it risk-free for 7 days. We're so confident that you'll love this new charting software package that we're offering a 30-day, no questions asked, money-back guarantee. If you're not completely satisfied with this software, just let us know within 30 days and you'll get a complete refund. In order to take advantage of this great offer, log on to tfnn.com and click on the Timing the Trade Charts banner, or call our office at 877-518-9190. That's 877-518-9190.
TFNN is proud to bring you the cutting edge of newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today. Click Investments Newsletters and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes a carefully selected portfolio can lower your volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angelo O'Brien, financial advisor and certified financial planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
Great Basin Gold is an international gold mining company with 2 producing mines in the world's most prolific gold mining areas, the Hollister Gold Mine on the Carlin Trend in Nevada and the Burnstone Gold Mine in the Wits Basin in South Africa. The Burnstone Mine is a low-cost, long-life, shallow mine that is a company builder, and the Hollister Mine is one of the world's highest-grade ore bodies being mined today. Burnstone offers a huge re-rating potential by producing in the 4th quarter, and Hollister represents a tremendous and very exciting exploration opportunity. With annual production of 165,000 ounces of gold in 2010, 260,000 in 2011, and 330,000 ounces of gold in 2012, Great Basin is poised to become a leading mid-tier gold producer. Great Basin Gold has resources of over 13 million ounces, exceptional organic growth potential at its current mines, and greenfield operations in Tanzania and Mozambique. Great Basin has strong management and a commitment to deliver exceptional value and cash flow to its shareholders while acting responsibly toward its surrounding communities. To find out more about Great Basin Gold, click on their banner on the front page of TFNN.com or check them out on the American Stock Exchange, symbol GBG.
TFNN introduces Tiger TV. Tiger TV brings you video content to help you succeed in the financial markets and beyond. Investors and traders can get in-depth information, news, commentary, and education for investing and trading equities, options, commodities, forex, futures, and more. Just go to TFNN.com and click Tiger TV and select your favorite channel from the carousel on the left. Grab a popcorn and get ready for Tiger TV, a great new service from TFNN.com.
Okay, welcome back, folks, to Breakout Investing with Ken Shreve on the TFNN Radio Network. Quick reminder, folks, the number to use to call is 877-927-6648. Before we take a look at some growth stocks on the move today, let's first get a quick check on the markets here. Why don't we do that? See where we're at with about a half an hour to go in Tuesday's session. And looks like we're bleeding a little bit into the close here. The Dow off its highs, up about 40 points, 0.3% to 12,130. The Nasdaq up 0.3%. That's 9 points to 2711, and the S&P 500 up nearly 5 points, 0.4% to 1291. I was looking through some charts in the Dow. There are some stocks in the Dow that I wouldn't touch with a 10-foot pole, and there are other stocks in the Dow that actually look compelling, continue to show pretty strong technical action. I mean, you've got names like McDonald's, MCD, Kraft Foods, KFT, Johnson & Johnson, J&J, all continuing to show resilience and price strength in the market. Looking at a chart right now of American Express, shares are up 0.7% today to $49.12. And what you have here is a really strong price performer that has pulled back nicely to its 50-day moving average, enjoying a nice bounce off the 50-day line today. If this is a market that surprises a lot of people and all of a sudden starts heading higher again, and who knows, maybe it's because of what Ben Bernanke says tomorrow. Maybe he soothes investor fear about the possibility of the economy heading into a double-dip recession. Maybe he says that is not likely going to happen. Who knows? But if the market does start to bounce, a name like American Express finding support at its 50-day moving average could be a stock that works in the Dow. Of course, the headlines in the financial sector have generally been bad, but you have to respect American Express's technical strength in the Dow right now. Again, a good bounce off the 50-day moving average. Still early in the game. It remains to be seen if it's going to find support there, but shares having a good day today. Again, up about 0.7% to 49.12. Keep in mind, you know, the Dow, the NASDAQ, the S&P 500, they're all below the 50-day line. So they broke through support, as have a lot of other stocks in this market. They've all been pulled down by the market. So any stock holding above the 50-day moving average is worth paying attention to. There's another stock in the Dow showing similar action, and we all know Intel very well. This is another stock that is came down to its 50-day moving average recently, corrected a little further off its high than American Express, but still, I mean, it looks like a bounce off the 50-day moving average. Still too early to say if a new uptrend is beginning here. You see the stock is well off its highs today. It's still up about 1.7% to 22.19. It did hit an intraday high of 22.44. So right now it's right in the pretty much the middle half of its trading range today. So Intel also showing pretty good action in the Dow as well. Moving on in the Dow, Travelers, another interesting name that continues to look pretty decent. You can see the similar story here. Okay, you've got Travelers, you've got American Express, you've got Intel. All these stocks trying to firm up at their 50-day moving average. So Travelers is up about 0.7% today as well to 61.46. Now you've got other names in the Dow that are probably arguably technically weaker than the names we just went over, but a name like DuPont, DD, Walt Disney, DIS, General Electric, GE, Home Depot, HD, all these stocks have come all the way down to their 200-day lines and look to be finding support. So it'll be interesting to see how some of these Dow stocks shake out over the next few weeks. But at this point, even though I have not been really active in my model portfolio with several new buy initiations, I am keeping track of stocks that are showing technical strength. So if the market does turn, I'll be ready to buy and take advantage of some profit opportunities. But right now, I know that if I buy a stock, chances are it's probably going to start heading lower. There's still too much selling in the market. We'll be right back, folks.
Tom O'Brien's weekly newsletter, The Gold Report, gives traders, investors, and money managers a thorough strategy for trading in the gold market. If you're an investor in gold or any of the gold mining equities, this newsletter is an essential tool that can help you become a better trader in the gold market. The Gold Report comes out every Monday with complete coverage of the entire gold market, including the XAU, HUI, the dollar, the bond, the rand, as well as more than 35 different mining equities. For the low price of $150, you will receive 13 weeks of the Gold Report, or you can order up to a full year for under $500. If you'd like to find out more about the Gold Report, log on to tfnn.com, or for more information, call our office at 877-518-9190. That's 877-518-9190.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
At Tiger Metal Exchange, we pay you more for converting your jewelry to cash.
Let's go to Brian in New Jersey. Hey, Brian, what's going on?
Hey, Tom, I just want to let you know I did give you some jewelry. My jeweler offered me about $650. But you get a check in the mail tomorrow for about $1,200.
At Tiger Metal Exchange, it's all about honesty when converting your jewelry to cash.
Okay, let's go to Paul in Florida first. Hey, Paul, what's going on?
I want to commend you on the Tiger Metal Exchange. I just did a deal with you guys the other day.
Oh, good.
And very happy.
Well, I appreciate it. Now, Did you sell us jewelry or did you buy coins off us?
I sold you jewelry.
Okay.
Yeah.
Awesome.
What we weighted at was less than you guys said, so, you're totally honest.
At Tiger Metal Exchange, we give you the tools to value your gold, and it's absolutely free. Call 866-618-8888 or log on to TigerMetalExchange.com. We've created the easiest, safest, and most honest cash for gold process. Tiger Metal Exchange. It's the only call you need to make.
Hi, folks. This is Tom O'Brien. My new book, The Art of Time in the Trade, Your Ultimate Trading Mastery System, is for sale at Amazon.com for only $18.40.
Okay, welcome back, folks. Breakout Investing with Ken Shreve. Thank you for tuning in. I wanted to take a look at some gainers today, some innovative growth names that are moving up nicely today. Taking a look at Omnivision Technology, shares are up nearly 8% today to $34.22. The chip maker was up sharply after a Taiwan-based news site, Digitimes, reported that Omnivision will supply 90% of the image sensors for the iPhone 5, with Sony supplying the rest. The new phone will reportedly have an 8-megapixel camera. So good news for Omnivision Technologies today. The stock is, again, up close to 8% to $34.22. Again, a stock that recently fell below its 50-day moving average. It's back above the line today. Technically still looks a little suspicious to me at this point, but again, the stock is having a good day today. Also wanted to take a look at an interesting name. Many would consider it a speculative stock, SodaStream. This is a company that recently reported blowout earnings. It recently staged a strong breakout over the $48 area. SodaStream is having another big day today. Shares up nearly 6% to $60.70. There are a lot of things that I like about this company. It does sort of get dragged over the coals because it's a speculative stock. First of all, it's very liquid. It trades almost 1 million shares a day. It has a market cap of about $1.2 billion. It's a new issue, and what I like most about SodaStream, well, there are several things I like. First of all, return on equity is 20%. That's a high number. It tells me that there's a good management team in place, an efficient management team that is executing a growth strategy. Perhaps even more important is the fact that revenue growth in recent quarters is accelerating. This is very important for a stock. You always want to see good bottom line and top line growth when it comes to earnings and sales growth. It's even better when it's accelerating. So this is exactly the type of stock that I would target for my Ultimate Growth Stocks model portfolio. I don't own it. It is extended right now, so I don't want to buy it up around where it's currently trading, $60, $61 a share, because the proper time to buy it would have been when it was breaking out of a good consolidation over $48 a share. But you're going to hear this company get a lot of flack in the mainstream media, but growth prospects are very real here. The product is pretty simple. It's a home beverage carbonation system, so you can make root beer, orange soda, cola right at home. And the company reminds me a little bit of Green Mountain Coffee Roasters, a stock that has come under a little bit of pressure in recent days. I think it's working on a 7 session losing streak, I should say. But SodaStream reminds me of Green Mountain when Green Mountain was in the early stages of its growth. And Green Mountain does a home brewing system, single cup coffee, where you can buy bold, mild coffee, decaf, flavored coffee. So I like SodaStream. I think that this is a real growth story, and I think that there's a good chance that this stock is going to continue to be discovered by mutual funds and other institutional investors. Now, at $60, $61 a share, what I would like to see it do from here is start to base, consolidate, and move sideways. And if we continue to see weakness in the broad market over the next several weeks, this may be the time when SodaStream builds what I would call a second stage or maybe a third stage base in preparation for another upward move. But I wouldn't buy it now because it is extended in price. Also wanted to take a look at Green Mountain Coffee Roasters. I just mentioned GMCR. This is another strong performing stock, but it has come under quite a bit of pressure. Hasn't fallen a lot off its recent high, but it is, and it's also holding above its 50-day moving average. So that's pretty impressive in this market environment where a lot of leading growth stocks are now below their 50-day lines. But Green Mountain down 1.9% today to 76.59. Not seeing waves of institutional selling in this stock, but Green Mountain is an example. When you're in a market downtrend, the market downtrend is eventually going to pull everything down with it. There was another growth stock that just kept hitting new high after new high after new high last week. We can take a look at Netflix. This is a stock that has defied expectations, just continues to move higher, but the stock faced some pretty serious selling pressure yesterday. It's bouncing back today, only up about 0.7% to 264.46, but to see that selling in Netflix yesterday, and there was some volume behind the selling as well. Again, in the early stages of a market pullback, it's eventually going to bring everything down with it. So the challenging thing right now is that you can still see find some decent charts out there in the market, but as I said before going into the last break, it just feels like any stock that you buy, the chances for it going down at the moment seem to be better than it going up. And in that type of market environment, I tend to favor cash in my model portfolio, and I just kind of sit on the sidelines. In my weekly updates, in my newsletter, like the one I did today, I comment on the market. I put a few charts out there that look interesting. I tell people I'm not going to buy now, but I will watch names, and again, I also provide updates during the week. So I'm not a newsletter writer that is buying and selling stocks every day. I am a newsletter writer that lets the market tell me when to be in and when to be out. Simple as that. So right now, being in a technical downtrend, and with the Dow, S&P 500, and NASDAQ below their 50-day moving averages, I think cash is a good place to be. Nothing wrong with getting out of the market's way and sitting the selling out. It doesn't mean that I won't nibble here and there. I may, and I've done that in recent weeks. And these stocks, they're not, they haven't gone sharply lower, but they really haven't gone anywhere. They're basically sitting right around my buy point. And that's just a reflection of the the current market environment that we are in right now. Okay. Also wanted to take a look at MasterCard, another strong performer. That's ticker MA on the New York Stock Exchange. MasterCard, also higher today, close to 1% to 274.55. This is another example of a stock, big price move in recent months, but it does look like it's firming up at its 50-day moving average. Notice that the stock is in the bottom half of its trading range today, though well off its highs. It hit an intraday high of 277.15. Now trading around 274.55. So this one, still could work, but again, I think growth stocks, the risk trade isn't exactly on right now. We'll be right back, folks.
Would you like to discover the next great tech stock? David White, TFNN's technology guru, has just launched his new newsletter, The Technology Insider. In his newsletter, David will be looking for those shining stars that may turn into the next Apple, Microsoft, or Cisco. David combines his technology background as a software programmer with his market skills as a successful professional trader to give you this unique newsletter. We're on the verge of the next great tech run. With the Technology Insider, you'll be in front of the run-up and not lagging behind. David is developing a long-term investment portfolio. Therefore, we're only offering the Technology Insider as an annual subscription with a remarkable price of only $395. That's right, for a little over $1 a day, you'll receive the fundamental technology wisdom and technical trading skills of the Technology Insider David White. What are you waiting for? Go to the front of TFNN.com, click on the link on the front page, sign up for your 2-week free trial, and become a Technology Insider today.
TFNN is proud to bring you the cutting edge of newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today. Click Investments Newsletters and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
Looking for some extra cash to help pay off some of your bills? Let Tiger Metal Exchange convert your unwanted jewelry to cash. We pay out 80% of the market price for gold. Our payouts are the highest in the industry, more than double our largest competitors. And we've created the safest, easiest, and most straightforward process for converting your jewelry to cash. Log on to TigerMetalExchange.com and get your free scale, your free eye loop, and get the cash you deserve now. We provide a free online calculator that converts your jewelry to cash at up-to-the-minute spot prices. We insure your items for up to $75,000 per shipment free of charge. We videotape the entire valuation process so that you can view it online. You can call us toll-free at 866-618-8888 or log on to TigerMetalExchange.com. Let Tiger Metal Exchange put more cash in your pocket without ever leaving the comfort of your home. Join the list of thousands of satisfied customers and go to TigerMetalExchange.com. It's the only click you need to make. Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his Opening Call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his Opening Call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the Opening Call, a $64 value, visit TFNN.com today.
TFNN introduces Tiger TV. Tiger TV brings you video content to help you succeed in the financial markets and beyond. Investors and traders can get in-depth information, news, commentary, and education for investing and trading equities, options, commodities, forex, futures, and more. Just go to TFNN.com and click Tiger TV and select your favorite channel from the carousel on the left. Grab a popcorn and get ready for Tiger TV, a great new service from TFNN.com. This segment is brought to you by Vista Gold. For more information, just click the Vista Gold banner on the front page of TFNN.com.
Welcome back, folks, to Breakout Investing with Ken Shreve. A little more than 5 minutes to go in Tuesday's session, and we are selling off into the close, it looks like. I know Ben Bernanke just started speaking about 5-10 minutes ago. I believe that is at the International Monetary Conference in Atlanta. So right now we have the Dow up 10 points, 0.1% to 12,100. The Nasdaq up 3.5 points or so. That's 0.1% to 2706, and the S&P 500 up just over 1 point, 0.1% to 12,087. Just hearing some comments from Ben Bernanke. I think I'm paraphrasing here, but he talked about continuing with an accommodative monetary stance, and he also said that he was not in the camp of economists that believe we are headed for a double-dip recession. I mean, I think it would really take a lot to throw this economy into a true double-dip recession. First of all, the definition of a recession is that you need a couple of quarters of negative GDP growth. Again, I think if GDP is at 1.5% over the next couple of quarters, I think the economy is going to be able to absorb that. I really just don't see the economy really putting on the brakes here, and I don't think Ben Bernanke sees that either. So, of course, it will all be predicated on economic data that we see over the next several weeks. I wanted to take a look at Apple real quick. This stock is really having another tough day today, down at another 1.5% to 332.91. Of course, yesterday Steve Jobs appeared on stage at Apple's developer conference to help launch some new products, including iCloud. But I think the stock was weak. Investors were hoping for some hardware announcements, but didn't get any. So they also didn't get any color on when the iPhone 5 is going to launch. So overall, disappointing. You're seeing some pretty serious sell the news. The stock was down sharply yesterday, extending losses today. Apple just looks terrible from a technical perspective. It still has its supporters out there. I'm sure people trying to pick it up here around $332, $333 a share. I do not like buying technically damaged stocks like this, and I certainly don't like buying when amid waves of selling. That's just a tough tide to swim against. So Apple does not interest me at all right now. It is a stock that I used to own for my Ultimate Growth Stocks model portfolio, but I recently took profits in it. I had been in the stock for several months and had a nice gain, and just felt like it was nearing the end of a price run. So made a well-timed sell there, took profits, and I really don't see owning Apple in the foreseeable future. Coming up after the close, we have earnings from Ulta, Salon, Cosmetics, and Fragrance. Let's take a quick look at Ulta. This is a very well-run retailer, a name that I've mentioned in the past. Not a well-known retailer, but one with a good track record of growth. A very well-run company here. Shares were down 0.2% to $49.60. Technically in a little bit of trouble here. The stock has been consolidating gains for about a week or so. It's trading below its 50-day moving average. I've never been a big fan of buying a stock so close to earnings. Let's see what the company has to say, and this company has made it a habit recently of reporting very strong growth. I think it will be the same this time around. The estimate is for quarterly profit to rise 35% from a year ago to 31 cents a share, with sales up 16% to $371 million. This is a company that operates beauty stores around the country, 350 beauty stores thereabout. Coming up tomorrow in terms of economic data, we've got the Fed Beige Book. That's basically an anecdotal summary of economic activity from the Fed's 12 districts. So we'll see how the market responds to the Fed Beige Book. We also have earnings after the close today from an interesting company, Measurement Specialties. EPS expected to be up 86% to 54 cents a share. The ticker for Measurement Specialties is MEAS. That's earnings after the close. We'll be right back.
Great Basin Gold is an international gold mining company with 2 producing mines in the world's most prolific gold mining areas, the Hollister Gold Mine on the Carlin Trend in Nevada and the Burnstone Gold